Welcome back. Steady for the market. So the Nifty still down about 25 odd points below the 11,650 mark. The Sensex down 150 points. So it's a good time then to drill it down to individual sectors and stocks. Rajesh Firvani, the founder and portfolio manager at Valcreate Investment Managers, joins in to discuss his mantra as well as what he's betting on. Rajesh, morning, and thanks so much for joining us in the studio. Just before we started this, you were telling us that you're seeing a lot of value in the NBFC space. In fact, this could be a once-in-a-lifetime opportunity to pick stocks. But it's important to pick the correct ones, differentiate the gold mines from the land mines. How are you differentiating it, and which would be the stocks that you would bet on?
So if I look at the entire space, there's been a polarization of valuations for high quality companies. So you look at HDFC Bank or for Kotak Bank or a Bajaj Finance, and they are trading at very at a premium to remaining stocks. And then on the other side of the spectrum, you have companies which are in trouble. You look at DHFL or some companies where there are issues like Yes Bank, and their valuations have been beaten down, stocks have been beaten down, but there is a space which is operating in between, which is in a state of flux. Now that space is very interesting, because if you look at a HFC, a second rung HFC, not HDFC is a star, but if you look at a second rung HFC, some of the stocks are trading at multiples of less than 1 time price to book.
So which are these second rung HFCs?
For example, I'll just give you some names like PNB Housing or Repco Home Finance. Some of these companies are still making ROEs of 15 to 18%, and AUM is still growing at 15%. Disbursements are getting hit, no doubt, but asset quality is still under control. And if you pick them, I'm not saying these stocks per se, but if you pick them today, I think you're getting them at valuations which are very much in your favor. So the risk return is very much in your favor today.
What about LIC Housing Finance? Because there the asset quality deteriorated. So would that be
has seen better days in terms of the numbers that they were showing in the past. But valuations again, in these kinds of stocks have got hit because of real estate exposure and the NPA issues that you saw over the last couple of years. I think the slippages per se are kind of, I would say, stabilizing. They're not going down significantly, but there is a stability in slippage.
X of Divan Housing you would bet on. Is there any other you would exclude from this tier 2 HFC companies?
I mean, there are names which I would not look at. My thesis is based on corporate governance and the promoters that you are betting on. And there are companies where there are no promoters. These are publicly owned companies.
Well diversified.
Yeah, or there are very good quality promoters where you can, take a bet, and I don't think there is much to lose in some of these names from here on. So this state of flux, is a very good sort of.
You'd say that for segment. Banking companies as well, banks as well.
Banks, NBFCs, and HFCs. These 3 segments, I think.
So let's just go one by one. You run us through HFCs. What about banks? What kind?
So banks, again, there are banks, I would say second rung banks, where I've seen valuations at less than 0.5 times as well. And at some point, these companies were making ROEs of 15, 18%. Okay, today the ROEs have gone down to 6, 7% because what has happened is that your credit costs have gone. Okay. Let's talk about SBI. SBI's credit costs are about 2% today. Okay, and the stock has not given you a return for the last 7-8 years. Okay, and at a 2% credit cost, the ROEs are substandard. The moment the credit costs go to say 1%, once your slippages, the issue goes away and your provisioning goes down. At 15% ROE, you're getting a bank, the leading bank in India, at 0.8 times price to book net of the subsidiaries valuation.
But there is a lot of ifs, right? When the things start to turn in. But you were talking about second rung. So
there are second rung banks.
So IndusInd, would IndusInd, RBL, etc. count?
Not specifically IndusInd. Maybe RBL. because
just for illustration, I mean,
so RBL again, one time price to book, trading at much below its historical valuations, just because the NPA is going from 1% to 2.5%. I think the results are today. So let's see how things go. I think there is a definitely value in some of these companies.
What about NBFCs? What kind? Again,
so again, there are NBFCs where because of the environment, somehow a high growth rate NBFCs growth rate has kind of got impacted, and valuations have also kind of got a bit impacted. But there are NBFCs where you are getting them at reasonably cheap valuations today compared to the historical valuations because of the NPA issue.
So names like Edelweiss would look
I would
attractive?
not look at something like that, but even a Chola for that matter is a very high quality NBFC. And I would think that this company is delivering in the current environment. They are they're present in the CV sector. The replacement market is growing for them. So I think when the environment turns around, probably a Chola will actually do much better than what it's doing right now. And at 2 times price to book value, I think it's still reasonable. A good quality name with a
some
good
names
pedigree
to ponder upon. PNB Housing, RBL Bank, State Bank of India, of course, is pretty evergreen, but even Chola Mandalam in the NBFC back then.
Just as a disclosure, do you own some of them in your portfolio?
Yes, I do.
Okay, you do. All right, fair enough. Rajesh, thanks very much. Great to speak with you.
Thanks.
Appreciate you joining in with the chat. Well, we take another very quick break here. We come back, we shift focus to the primary markets.